Hello and welcome to Startup Street. I'm Shruti Mishra and with me are Arundhati Ramanan and Ritu Singh. These are the top headlines from the startup space. 48 hours ahead of a scheduled extraordinary general meeting to oust him, Byju Raveendran says the $200 million rights issue has been fully subscribed, also offers to restructure the board of crisis-hit Byju's. Investors who own 30% stake in the firm have called for a shareholder meeting on Friday to remove Byju Raveendran as CEO and revamp the board.
Furnishing rental brand Mojo secures 210 crore rupees in an ongoing funding round. This round was led by Edelweiss Discovery Fund Series 1. Existing investor also participated in this round. The firm provides furniture appliances, among others, to users on a monthly rental basis.
QSR firm Walco Foods NIC raises $20 million from existing investor Jungle Ventures. This is the Singapore-based VC's second investment into the firm. Fresh funds will be used to propel Walco's product expansion and customer reach. It will also be used to accelerate penetration into the Indian ice cream market.
Eat Club posts a revenue of 315 crore rupees in FY23, a 50% rise as compared to the previous year. However, losses balloon at 69 crore rupees in FY23 due to employee benefits and procurement costs. Eat Club operates 8 cloud kitchens, including Mojo Pizza, Box 8, NH1 Bowls, and others.
Walmart-owned PhonePay launches Indus Appstore to rival Google's Play Store. Indus Appstore is a homegrown Android app store. The move comes amid a standoff between Google and some of the country's top startups over Google's policies and commission fees.
Those were the headlines that we're tracking for you this evening. Now straight to the top story today. EdTech startup Byju's founder and CEO has announced to shareholders that the company's $200 million rights issue has been fully subscribed. This comes just 48 hours ahead of a scheduled extraordinary general meeting to oust Raveendran. Ritu, you've been tracking all the ups and downs with the Byju story, so tell us more. What's happening right now?
Well, there's a group of investors who collectively hold more than 30% stake in Byju who've called for this EGM on Friday to remove Byju Raveendran as the CEO and reconstitute the board, citing several concerns that range from financial mismanagement to, the failure to enforce legal rights and a cloak and dagger approach to shareholder information, all of it leading to substantial value loss. Now, there are 7 key items on the agenda for the EGM. The key among them include, of course, removing Byju Raveendran as CEO, like we said, and also the removal of Divya Gokulnath and Riju Raveendran from their respective managerial and directorial roles to prevent any further hemorrhaging of shareholder value. The proposal advocates an interim CEO appointment as well and the enlistment of a search firm to find a new CEO for Byju's. Board restructuring, that is a central focus point, with shareholders advocating for a new 9-member board that will include 1 founder, 2 executives from within the group companies, 3 shareholders and 3 independent directors, and also a shareholder ratification within a month's time to appoint this new board. The other resolutions which are up for vote also include appointing a forensic auditor to scrutinize acquisitions, regulatory compliance, and all these alleged breaches. They've also sought to forbid the founders from undertaking any direct or indirect transfer of any shares, any rights, titles in group companies without shareholders' approval. Now, this group of shareholders, which is led by the likes of Prosus, Peak 15, General Atlantic and others, they've demanded management accountability for the delay in filing financial statements, their strategy for the BCCI insolvency case, for instance, their response to the ED notice which was issued last year, the failure to resolve the issues with term loan B lenders leading to lawsuits and so on. Now, despite Byju Raveendran's 11th hour attempt to propose this board reconfiguration in his letter to shareholders yesterday, we understand investors consider it too little, too late. So watch out for Friday. It's going to be a crucial day for the fate of the company and its founders, of course.
Absolutely, Ritu, and thank you so much for taking us through all the details on what's happening at Byju's. Moving on, the second story of the day, fintech platform PhonePay launches Indus Appstore. This will be India's own Android-based app marketplace. The App Store will be available in 12 languages apart from English. Akhil Vishwanath joins in with more. Akhil, tell us more about PhonePay's App Store.
PhonePay has indeed opened a new battlefront with Google in India by launching Indus Appstore, challenging the domination of Google Play Store in the country. With Indus Appstore, PhonePe says that it really wants to offer a credible alternative to app developers in the country, and one that is more localized, for which Indus Appstore allows app developers to list their apps in about 12 languages, and it also allows them to connect with consumers in a more engaging way through video-led discovery, including short-form videos. But more importantly, following the backlash that Google Play Store has received in the country, Indus Appstore has put some measures in place to help app developers overcome some of those challenges. Now, first of all, it is not going to charge any developer platform fee for the first year until April 2025. Secondly, it's not going to charge any commission on in-app purchases, whereas Google Play Store and Apple App Store charge somewhere between 15 to 30%. Thirdly, it also allows app developers to use third-party billing systems or payment gateways, which Google only recently included after the Monopoly Watchdog CCI's directive. Since opening up the app marketplace in September 2023, Indus App Store has seen about 2 lakh app and game onboards on the platform. That includes Flipkart, Myntra, Blinkit, and others. But when it comes to gaming, very curiously, Google has remained a little cautious when it comes to allowing RNG apps on its platform. But Indus App Store has already been able to, has allowed the onboarding of Dream 11, MPL, MPL Gamescraft, and several others. Back to you.
All right, Akhil, many thanks for those details. Now, moving on, electric vehicle financing company Vidyut has raised $10 million in a mix of equity and debt. The funding round was led by 314 Capital and saw participation from Sison Capital, Zephyr Peacock, and Ulterior Capital. Founded in 2021, Vidyut mainly caters to electric three-wheeler vehicle fleet owners by providing them with financing and ownership plans that reduce the risk of owning the battery, which is the most crucial part of an EV. Joining us now to discuss their plans to scale the business is Gaurav Srivastava, the co-founder of Vidyut. Gaurav, thank you so much for joining us on Startup Street today. You know, like I just said, you're making commercial EV ownership simple, affordable, and risk-free. So talk to us about what's on offer and how are you helping improve the adoption of electric vehicles in the country?
Thank you for having me. So as you said, in terms of simple, affordable, and risk-free, one of the core products, which is the financing product that we offer, is what takes the stress of battery ownership away from the customer. So from a financing standpoint, we charge for the battery on a pay-per-use model, as you pay as you go. So pay-per-kilometer model, so it changes the capex of the battery upfront into an OPEX and makes an EV usage cheaper than a petrol or a ICE vehicle from day zero. That's what it does. And the second thing is we also offer battery resale and battery exchange offers so that the customer or the end customer, auto driver, doesn't really have to worry about the lifetime of the battery. Post the warranty period, the OEM, we exchange the battery for free and the person can keep on driving the vehicle as is. So that's the core product that we have right now. It's the first of its kind product in India in terms of converting this capex to OPEX. And as with this fundraise, we are further launching new product lines, moving into the overall EV ownership journey. We were working into simplifying the insurance, the servicing, as well as the resale experience of the buyers.
Right. So a couple of new things that you're going to launch there with the funds that you've raised. But you've raised the $10 million and it was a mix of equity and debt. Can you tell us how much equity it was and how much was debt?
Sorry, but right now we're not kind of disclosing that. You were right in pointing out the investors in terms of 314, Zephyr, Sison,
right.
And Ulterior is the venture partner.
You know, also in the current environment, we've seen a slight dip in the adoption of EVs. So is this a big challenge for you? And which of your offerings are you seeing the most growth and traction for at this point?
So the most growth and traction, I think one of the two biggest reasons that we have seen in according to the dip in adoption, one of them is EVs like same performance being higher in capex than a petrol vehicle. So you would always be a 30-40% more at a higher capex number. And that's what we are solving as through our product, which has seen a lot of traction, where the EMI or the fixed part of the EMI actually becomes cheaper than a petrol vehicle. And the battery then goes on a per kilometer model, which is cheaper than per kilometer of petrol that is out there. So that's one of the key problems that a product aims to solve itself. And that's where we are seeing the maximum growth. The other part on the adoption is, I think, on the after-sales network as the vehicles develop, right? You need an after-sales network and a healthy resale market for the entire ecosystem to kind of work. And that's where we are foraying into now, so that the entire ownership journey becomes kind of simple and affordable.
Right. If you could quickly tell us, what have the revenues been? You launched in 2021, so what are you clocking right now? And what's the target for this year? What's profitability looking like?
So, I mean, see, we are still C2 Series A, so the revenues are not really something to speak of. What I can tell you is, in terms of our vehicles financed and the growth, we have done 3x of what we did last financial year. And for the next financial year, we are again looking for a 3x growth on that in terms of the number of vehicles financed and the revenues as well.
All right. And if you could quickly tell us, you're looking to expand your presence into 40 Indian cities. What's your current presence and which cities are you looking to expand into? Are you on track to achieve this target?
Yeah, so we're currently present in around 22 odd cities. The major metro markets of Delhi NCR, Bangalore, Hyderabad, Chennai, etc. We are already there. What we are seeing is that the market is moving towards more of the tier 1 and the satellite towns around the metro cities. So we are also expanding there along with the OEMs. And that's where we see a bulk of the growth coming in terms of 40 total cities, and our headcount also growing in that proportion.
All right, Gaurav, thank you so much for joining us on the show today. We're completely out of time, but we wish you all the best going forward on this journey.
Thank you. Thanks a lot. Thanks a lot for having me.
Well, with that, it's time for us to head into a short break. But coming up, clean tech-focused NBFC Metafin raises $5 million. We put its founder and CEO on the hot seat to know about the company's offerings, fund deployment plans, and more. Stay tuned.
Welcome back. You're watching Startup Street. Now, clean tech-focused NBFC Metafin has raised $5 million in an equity funding round led by Prime Venture Partners and others. It was founded in 2019 and helps businesses accelerate the move from fossil fuel to cleaner sources of energy. And this funding is going to help it catalyze solar adoption in rural India. So joining me now to discuss this is Sandeep Chopra, the founder and CEO of Metafin. Sandeep, welcome to Startup Street. Thanks very much for your time here. Before we get to that funding, very briefly tell us about Metafin, what the current size of your loan book is, and how many solar rooftop projects have you financed?
Yeah, thank you, Ritu, for having me on the show. So our current AUM is about $2.5 million. We've solarized about 1,000 businesses in rural India. And the focus is largely rural, which is need-based demand, and people who are running their businesses either on diesel or have a severe, intermittent power problem. And this is diametrically opposite to what you see today, where people are largely focused on, urban centers, which are grid connected. Majority of our customers either do not have access to the grid or have significant intermittent power problem.
So tell us about this $5 million funding. How are you going to deploy this capital? What kind of loan book growth are you targeting? And you're largely in Uttar Pradesh and Bihar. Are there opportunities you see to expand elsewhere?
Oh, absolutely, absolutely. So with this raise, I think because we are the first ones in the country to do what we are doing, we basically opened the doors for capital to come into this area. There are three fundamental areas that we are focused on. One is to expand our AUM from currently $2.5 million to about 10 to 15, depending on the leverage that we get on top of this equity raise. The second one is to improve our customer experience by investing significantly on the tech stack, both on the ops risk side and the customer experience side. And third, but not the least, is just to strengthen the senior management team and the teams across the other states that we are targeting. Coming back to your question in terms of if the opportunity is there in other states, absolutely. We are working at the ground, at the ground level at Bharat, and our ambition is to move deeper into UP, move deeper into Bihar, add Jharkhand, Odisha, and Rajasthan in the next 12 to 15 months.
Okay, you're targeting financing about 1 million projects in the next 5 years. What would that mean in terms of growth for you? If you could give us a sense of your even profitability that you're eyeing, and with a government push as well towards solar, what would all of that mean for business?
See, I think there's a significant amount of tailwind at this point in time for the industry. So that's something that we'll take in our stride and move. I think the areas that we are targeting are the least spoken about, in media today. Our belief is that these businesses that we are targeting in rural India, across these 5 states, run into, if not less, about 10 to 15 million. And the ambition of having a million, solarizing a million businesses of these need-based demand seems very achievable in the next 5 to 7 years. In terms of profitability, our unit economics have always been, positive. Even at this scale, we are, unit economic positive. The only costs that we bear today are fundraising costs, etc. So I don't think, growth, I don't think demand, or I don't think profitability is going to be a challenge for us.
Okay, in that case, given that none of these are challenges and you're looking to grow, what are the other major banks and lenders that you're engaging with to collaborate on lending for this? And I wanted to understand, are you looking at lending more not from your balance sheet in a co-lending model, or what's the strategy there for this?
So I think it's going to be a mixed bag. So as we speak, we are already kind of tying up with a few co-lending partners. Like I said, this is the first time it's been done in the country. So therefore, it'll take other finance players to kind of get used to it, understand the market, the TAM and the SAM. We are also in advanced talks with some of the banks to tie up with us. And the idea is very simple, that you need to manage your operations risk of these plants really, really well so that your finance is not at risk. So our recovery today is about 99.5%, which is on this rural book. And largely because we focus on the fact that the plants have to run, people have to save money before they pay us.
All right, Sandeep, thanks very much for joining in, on Startup Street today. It was a pleasure speaking with you. Thank you.
Likewise. Thank you. Thanks for having me over.
All right, moving on. On the hot seat today, we put the spotlight on MyMatch, an AI-powered WhatsApp recruitment and community platform that connects people with a variety of opportunities using AI technology. The platform facilitates connections not just for employment, but also for funding, mentoring, and shared interests. And to tell us more about it, joining me now is MyMatch's founder, Arjun Khanna. Arjun, welcome to Startup Street. Let's first talk about the pain point that MyMatch is solving. If you could elaborate on how both companies and candidates stand to benefit from your platform and what differentiation MyMatch has from traditional recruitment methods.
Thank you for having me on the show, Shruti. So number one, what we are doing is we are reducing both cost to hire and time to hire. To give you certain statistics, the time to make an offer globally is about 102 days. We are bringing it down immediately to 30 days. In India, that average is 62 days. And what we are saying is that if you're doing repeat positions, we'll in fact reduce it to 10 days and just 3 days after that. What we're also doing is that we're reducing time for writing job descriptions. AI is assisting humans at every step. So right from writing the job description to actually sourcing candidates from 920 million candidates where we plug into LinkedIn and Naukri and the likes of that. So we use very advanced AI algorithms to reach out to people. Then as far as screening, assessment, and interviews are concerned, it's all AI based. And we are very different from all others because we are a bionic firm, which means AI first and then humans actually following through. As far as candidates are concerned, what we're trying to do is to ensure that they have an excellent experience, and we're driving an intent-based economy that the candidate would say that this is what I want from life.
Okay.
And the AI helps you achieve it.
All right. Arjun, you officially launched MyMatch in January this year. What is the kind of impact you've created so far, and how many clients have you on board, and what are the targets for the future?
Well, recruitment is a very cluttered market, and despite that, in just 2 months, we've been able to get 8 clients on board, which are doing projects with us right now across sectors, and right from social sector to fintech and tech and non-tech both. What we are being able to do with our partners, which is OpenAI, Meta, we've got Glider, and the likes of those. We are able to drive scale. Yeah.
All right. Arjun, tell us how is AI reshaping the employment landscape? There is a growing concern about AI potentially leading to the loss of millions of jobs, especially in recruitment. How does MyMatch plan to address this paradox? If you could share insights on how MyMatch leverages AI to create new opportunities in this changing world.
Yeah, so right now, as on date today, there are 126 million open jobs globally. There are about 300 million candidates as well. And if you look at India's market, you have 77 million people on LinkedIn, of which 21 million are looking for jobs, and there's only 500,000 jobs available. So what we are trying to do is precision matching, and therefore, rather than a candidate having to look for jobs, we're trying to ensure that we recommend jobs to them. And apart from jobs, we also we're using AI to do all of that. Yes.
Okay. Arjun, tell us, what are the cost implications of engaging with MyMatch's services? How do you structure your pricing model to ensure accessibility and value for businesses of different sizes?
We've made our pricing extremely simple. It's just half month salary. So therefore, we're reducing cost to half or less. And we are also ensuring that we're trying to lock in for revenue loss for companies which are like GCCs in India. We've actually built a model which is very, very unique, a probabilistic model being mapped to a deterministic model.
Arjun, one final question before I let you go. It's estimated that each day a company fails to recruit the right candidate and it incurs an average loss of around $500. Could you explain how MyMatch aids companies in mitigating these losses, and what kind of efficiency gain does your platform offer in the recruitment process?
Yeah, so what we are trying to tell a company is that you tell us that you're going to be getting a client, and then what we will do is put a probabilistic model into something more deterministic to ensure that we will cover your risk and have candidates lined up just at the time you want to hire. So we're able to do that at scale, where thousands of candidates can actually be lined up at scale for a company.
All right, Arjun, unfortunately, we've run out of time, but many thanks for joining us on Startup Street today, and wish you the very best for the future. Thank you.
Thank you very much.
And with that, it is a wrap on this edition of Startup Street. More news and updates continue on the other side. From Shruti, Ritu and I, goodbye and many thanks for watching.